In Mark and I's last podcast, there's a few points I thought were really critical, so we decided to condense those down and share them with you in this video.
For those of you out there that are married, sorry, you saw in the title, should I pay my spouse or not? Well, some of you are like, of course not. And others are like, I sure should. Yeah, damn straight. All those single people are like, I don't care.
And one of the most common questions for business owners when they're starting up a new business or as they're growing, their spouse is involved, they're kind of on the sidelines, they're there day to day. There's all these different factors here, but this is a very, very common question and one that has some tax and financial ramifications. So we want to make sure we cover it so you know the scenarios. When should I add them? There's a number of misconceptions about reasons to add them that we want to dispel. And then also we're going to hit the scenarios of like, this is when you do want to actually add them. Well, should we talk about why you may not want to add them? I mean,
Yes,
that's the first thing right out of the gate here.
Yeah.
Adding them on payroll means you're also going to be paying in to FICA. So if I'm like, well, I'm going to pay my spouse $50K. Oh, are you? Okay, you know you're paying into Medicare, Social Security. As the employer, the business is going to pay that. And your spouse, by the way, too, is going to get half of that withheld too on their paycheck as the employee. So that $50K adding them on payroll is going to actually cost you 15% on both sides of it. That's a lot of money.
Yeah.
That's $7,500 bucks.
And what I wanted to say, I was going to start doing the math. It's more than that. You've got SUTA, state unemployment, FUTA, federal unemployment. She or he may not even be exempt from workers' comp. So now you've got all these additional payroll costs that are going to kick in.
You could otherwise just take that $50K that you would pay your spouse, right? And just take it in the business as profit. I didn't have to pay that into Medicare or Social Security or unemployment or add them to workers' comp.
I mean, I get a write-off, I guess.
Yeah, you can write it off. Write that. Okay, let's say you paid your spouse that $50K. All right, you paid some taxes on it for the Medicare and Social Security and all the other stuff we just mentioned here. Yeah, but I got a $50,000 deduction, Matt, because that was wages. Yeah. $50,000 deduction.
Yeah, you don't pay tax on that. Oh, I'm sorry, you're married? Don't you file a joint 1040?
There's a W-2 that's going to pop up. It's going to hit your 1040, and that $50K is coming right back.
The big reason why you don't need to do this, because you don't want to do it to pay the FICA, but you think you need to because your spouse is going to want Social Security. And I guess that's true. If you don't pay them, they don't get Social Security.
That's myth. Let's bust that right now. If you have a spouse who is non-working, or maybe they're a little more part-time, they've been a homemaker, they've raised kids, whatever, it doesn't matter the scenario here, they can get what's called the spousal benefit of Social Security, which means they get half of the benefit you'd be entitled to. You still get your full Social Security benefit, but they still get a Social Security benefit that's half of what your benefit was. Even if they didn't work one day, they're still gonna get that.
And even if you get divorced, they're still gonna get that.
Yeah.
Even if you die, they're still gonna get that. And so it's a protection mechanism, so you don't need to put them on payroll.
I have so many clients that are like, well, I just want to give them something so that they get some Social Security. So I want to pay them 30 grand a year, 50K a year. And it's like, okay, and you're taking 100K a year or more. Their spousal benefit is automatically going to be way more than what you're dropping in here to try and add them on payroll. So do not do it for Social Security benefits. They're going to get it already. That benefit is almost always going to be more than if you started paying them out of the business. Definitely going to be more once you factor in the Social Security costs, because you do actually pay in to get that non-spousal benefit. Yep. We all have this person that's a partner in our life, and your business as a business owner is such a key role in that. They're kind of in this advisory role. Now, here's another thing you can still do with your spouse without having them on payroll. You can actually still make a Roth IRA contribution for your spouse, even though they don't have their own earned income. Because that's another thing a lot of clients will say is, well, Matt, they have to have earned income. My spouse has to have a W-2 and have earned income themselves in order to make a Roth IRA contribution for themselves. I want to drop 7K in myself, but I want to do 7K for my spouse as well. So I'm going to give them a W-2 for 7K. You don't have to, right?
Yeah, another myth.
There's a spousal contribution rule that says the non-working spouse can attribute income of the working spouse to make a contribution to their IRA.
There are those times where the W-2 needs to come out.
Yeah, and we like adding spouses on payroll for a couple of reasons. The number one reason I will do it with my clients is they have a solo 401k or some, maybe 401k plan for the business in general.
Yeah, it could be
it could be a group or other. They have other employees too. They want to make a contribution for the spouse. So like, Matt, we already did the 7K to the Roth IRA. We want to drop more in. I've got my own 69K I can do for myself, but you're telling me if I add my spouse onto payroll, I could do another 69,000 in solo 401k contributions for them? Yes, that's possible. Now you need to pay them. We're assuming you're making good money here in the business where you can get maximum retirement account contributions. And this is 401ks. There's no spousal contribution rule like we talked about in IRAs for 401ks. So they will need to get a W-2 to do their own 401k contribution.
This is after you did the Roth. You can still add your spouse to payroll and they could do 23,000. So now they're doing 7 in Roth and 23 in a 401k that could be Roth as well. Now you're dumping 30 grand into your 401k and in your spouse's 401k.
If I really want to get a lot of retirement dollars in, because I do have the clients that are like, Matt, dude, I want as much Roth dollars as possible. And now in the Roth solo Ks, you can do 69,000 of entirely Roth money. And there's a reason to do that, because if I get a little nest egg of 69, 70K, let's say, that I can grow substantially tax-free, now I'm off to the races. And we've got the clients that have the 10, 100 million plus Roth accounts here. In those scenarios, I'm like, all right, let's pay you enough to max out even the 69K. I'm going to go past just the 23. I want to do 69K because starting, this is last year, this is new, all of the contributions into a solo 401k can be Roth now.
Yeah, I'm going to just run the numbers here for fun on this. 69,000, I start, and then I'm going to continue 9 more years. You'll have $1 million of Roth money in 10 years. So you start right now, you put in 69 grand, and you keep your spouse on payroll for just 9 more years. At the end of those 10 years, you'll have $1 million tax-free.
And this is, we have so many clients that are small business owners, self-employed, and they're like, no one set up a 401k for me. Matt, I'm 45. I don't have a 401k anywhere. I didn't work at a corporation that did a match and everything. It's all been on me. We're like, the solution is the solo K. If you're like, Matt, things are tight and I've got to keep reinvesting just to stay competitive, then just do the 7K in a Roth IRA every year. And maybe you got to do backdoor because you're high income. But the ones that do feel behind, and this is kind of the ones I do run into that are like in their later 40s, and we were talking about the people in their 40s and 50s that are the business owners that don't have this. They're making good money for the most part. Yeah. They might have upped their lifestyle a little bit too. And I can say you're a little guilty on that too. I know you've reinvested in your business, but now's the time to start catching up with that. It is not too late. If you think about investing this account for another 20 years, I know you just did 10 years. You're not even getting Medicare until you're 66, folks. You've got 16 years there. So a lot of times we're talking about even a 20-year horizon to keep investing and growing this money. So maybe it's only half of that. You're dropping 30K a year in. It's reasonable to do.
Hope you found value in that video and took something away from there that can help you on your wealth building journey. Make sure you're subscribed though to the channel, because I got tons of information I want to share with you to make it easier, faster to build wealth. We'll see you next time.